Do you guys know that something incredibly bullish just was announced for the overall stock market? And this is probably not going to be talked about all too often, but it is the difference between a recession and a depression, and I think it is very much worthy of a video. At the same time as that, we did get a lot of bad news out of crypto, and that situation is getting a whole hell of a lot worse. So we got a lot to talk about here in today's video. If you guys are new to the channel, my name is Michael Tyler. Consider liking the video, consider subscribing to the channel, and sticking around a while, baby. Let's make this money. Let's not waste your time. Let's get into this video. So for the day, the markets, S&P was up about 1%, NASDAQ up about 1.5%. This is the televised bounce that I've been talking about. 5 to 10% from the bottom is really what I expect. If we take a look at where this bounce, or how this bounce I should say, has played out so far, from the bottom we are up almost 5%, up about 4.5%. So I think at the minimum we're getting close to that minimum bounce that I see coming. That maximum bounce I see coming, if we do pull it out to 10-15% higher, it's going to be about $400 and some change on the S&P. For a 10% bounce, about $400 flat, and then a 15% bounce from the bottom would be about $417 on the S&P. That would put us back to where we were in the beginning of June, which I do think is very possible, especially after the news that we did get today, which is quite phenomenal for the overall markets and for credit in the future, and the difference between a recession and a possible depression. So the good news for the day, and something you guys are not going to hear about all too often, but will make all the difference when shit hits the fan. The Fed says banks could withstand 10% unemployment, 55% stock price drop in annual stress tests. The Fed sees banks will have enough capital to keep lending even if unemployment rises to 10% under a hypothetical scenario. And if we come down here and we see what the Fed is actually talking about, it says the model included a 5.75% increase to unemployment to 10%, a 40% decline in commercial real estate prices, and a 55% drop in stock prices. The Fed estimated $612 billion worth of potential losses for banks in its most severe economic scenario, and said even if this comes to pass, banks would still be healthy enough to provide loans to homes and businesses to keep the economy afloat. That's a $50 billion more severe loss projection than a year ago by the largest banks. And of course, the Fed goes on to say this is a hypothetical scenario, and that this is only used to test the banks and make sure they could hold up if the worst case scenario was actually realized. So this is not the Fed projecting this is what is going to happen, simply to say the economy would not collapse if this worst case scenario did happen. So that is a very good sign, because if the banks are not able to continue lending and to be liquid, that's where you get an '08 kind of scenario. But add high inflation in there, add quantitative tightening, add all of the things that we are currently faced with, the energy markets being sky high. That would be a depression if the banks are going through liquidity issues right now. If they're looking at bankruptcies, that would not be good, right? So we're probably going into recession. It looks like we could confidently say we will avoid a depression. You really need the banking sector to go down and take a massive hit in a big way to really get a depression. All depressions have really, a lot of the depression was actually in the banking system, the depressions that we have had. So there is that. That is the good news. Very, very good news. I'm not sure how much it'll actually be talked about by financial media, but there is a lot of people that are paying attention to this. Nonetheless, what is going on in the crypto markets? Crypto is not doing so hot, guys. So we talked about this yesterday, but Voyager's exposure to Three Arrow Capital is worth about $600 billion, $665 million, $1 million, worth more than the whole market cap of Voyager Digital, and they're essentially trying to get their full repayment by June 27th, but they did demand a $25 million USD payment by June 24th, and it doesn't look like they're going to get their Bitcoin back. It doesn't look like they're going to get their USDC back. It looks like Three Arrows is, going to go under when all things are said and done. That's why Voyager Capital was down 60% yesterday, and they were down 4% today. The market cap of Voyager Digital is only $149 million. This thing is definitely priced for a bankruptcy around the corner. Now, this is even more alarming in my personal opinion. Crypto brokerage firm Voyager is limiting customer withdrawals to $10,000 and to 20 transactions during a 24-hour period. So this is not looking so good for crypto. And why specifically? Why am I so worried about crypto? And why do I think it's going to be a thorn in the back of, stock market investors for quite a long amount of time? Is because you don't know how bad the situation is actually under the surface. You have no idea. There could be a lot of bad loans out there. There could be a lot of exchanges in a very bad spot giving out these loans that hedge funds are essentially just leveraging as much as they want, because there's no transparency in crypto market. So during a bull market when everything's fine, crypto is great. People love the fact there's no transparency. But during a bad market when there's liquidity issues, firms are going bankrupt. Voyager Digital is about to go bankrupt. Three Arrows Capital and many other players like Celsius as well. When that shit's happening, people want to stay out of crypto. People want nothing to do with crypto, and that's going to feed into the stock market and definitely cause a lot of that negative pressure to be put on equity markets as well. Now, I do think, given the very positive bank stress test results that we just got and the lack of data that is really of substantial importance that will move markets in a big way, you really don't have anything for tomorrow that's going to drop or pop the markets 2 to 3%. I think we should get another decent day to the upside. I don't expect anything wild. Like I said, I don't expect a 3, 4, 5% day to the upside tomorrow. I also don't expect a down day pretty much at all tomorrow. This Fed bank stress test is very important for markets, and I hope you guys understand why that is. But it leads me to believe that we're going to see a bullish reaction in the markets. As far as economic data that we do have coming out tomorrow, you do have new home sales for May. That comes out at 9 a.m. in the morning. You do have Michigan consumer sentiment, the final numbers for June. That does come out tomorrow as well. Those are going to be the two biggest catalysts, at least for America directly. You do have UK retail sales month over month for May. That could also be important given, how directly related we are to Europe, and how much the economies are actually the same in terms of retail sales, in terms of GDP numbers, in terms of essentially inflation. Really everything is kind of similar in the Eurozone to America right now. But again, I don't expect that to be a big deal, what is going on in the UK, but it could be. And that's the thing, you just really never know right now. In this kind of market environment where the markets can flip-flop back and forth, go from pricing in a 3% chance of getting a 75 basis point rate hike on that Friday before the Fed meeting, and then by Monday, you're expecting a 75 basis point rate hike by a 97% probability, completely flip-flopping over the weekend. Because of the data that came out on Friday, because of the CPI report, you never know. If bad data comes out, then that's going to change expectations, and the Fed will listen to the markets and do what the markets are pricing in. So bad data, more rate hikes getting priced in, that's what the Fed is going to do, or less rate hikes getting priced in, that is also what the Fed is going to do. So economic data will be very, very important. And for the next coming week, you do have more data that is important. On Monday, you do have durable goods orders month over month for May, and then on Tuesday you have goods trade balances, retail inventories excluding autos, wholesale inventories month over month. That's going to be very important just because inventories lead to price reductions, which is negative obviously for the odds of a recession, but it could be positive for inflation. And then you do have the final numbers for GDP that come out 7:30 in the morning on Wednesday, you do have a lot of oil and natural gas data that comes out Wednesday as well. Thursday, you have personal income month over month for May, personal spending month over month for May, 7:30 in the morning. That comes out. PCE price index month over month, year over year. Initial jobless claims, core PCE price index. Some grain data that comes out for wheat, corn, soybeans. Some more energy data that does come out, which usually is not that important, but specifically PCE, personal income, and personal spending, those will be the main catalyst of next week, and that's where you could see some more potential downside in my personal opinion. And then on Friday, you do have ISM manufacturing PMI. That's probably going to be the biggest catalyst, single catalyst, I will say, of the week, and that does come on Friday. So I do think it's possible to see that bullish reaction on Friday, or tomorrow really, and then to see a bullish reaction possibly on Monday and Tuesday if durable good orders are good, and Tuesday just because there's not too much actually coming out on Tuesday. Nonetheless though, just be careful with what you guys are doing. I think, and I'm going to be very honest with you guys, I do think the markets do come down and hit lower lows, but I don't think it happens until we go into a technical recession, which could be as soon as July 28th. That's when we're going to get the estimated or advanced estimates for Q2 GDP data. And if that's negative, you are going to be in a technical recession. The markets are going to realize the Fed is raising rates. At the same time, we have quantitative tightening. At the same time, we have very high inflation. So the Fed will have to break the economy at that point, and possibly in a very big way. So that is going to be all for this video. If you guys found value out of it, hit the like button and subscribe to the channel. Consider sticking around a while. Get yourself free stock down below in the description as well with Webull, Mumu, and Public. Thank you guys for watching, and I will see you in the next one.